tonight's webcast. And tonight you're going to have a real treat. If you're on this webcast tonight, you're going to learn all about how you too can get gold directly from a system without money coming from your own pocket. Just going to give you a brief synopsis of my own story here. My name is Hal Neff, and I've been part of this business for the last 22 months, and it's allowed me to get financially free. It's allowed my wife to retire. It's allowed me to help a whole lot of people make some significant income, as well as it's just been an awesome experience helping other people and giving other people some hope. Well, anyway, let me introduce to you Howard Olson, who you see right below me there. Howard Olson is a world-class sales trainer. For the last 30 years, has been training some of the biggest companies around the world, Fortune 500 companies. Most recently did a big sales training event for the government of British Columbia. Howard understands gold, has been buying gold for years and years and years. And he has an uncanny way of making complex things very, very simple to understand. So I want you to welcome Howard Olson today. He's going to give you a presentation about why you need gold and how you can get it without money coming out of your own pocket. Go ahead, Howard.
Oh, that's brilliant. Thank you so much, Hal, and good evening, everybody. It looks like we've got a great crowd on. This is the first time we've tried this 4 o'clock time slot, and it looks like we got a winner here. So thanks for joining us. Like Hal said, my name is Howard Olson. I'm based here in Vancouver, British Columbia. And I'm going to talk to you tonight about this company called Karatbars. And you can see just here on the opening slide, bringing financial wholeness into a broken world. And I think all you need to do is look at the headlines. I mean, today the stock market has plunged again another 400 points. The TSX is down. The Dow is down. Gold has risen by more than $50 just in the last 36 hours alone. And that tells it that there's something wrong in the world. And tonight, what I'm going to try to do here is help make sense of some of the things that on the surface may not make sense. But more importantly, I'm going to show you a holistic system that will enable you to not only save money, but probably for the first time in many people's lives, actually begin to accumulate real and genuine wealth. And having done that, okay, it's one thing. It's not how much you make. It's about how much you keep. And how do you protect and preserve your purchasing power? So I'm going to take you through a holistic program that will show you how to do that. Like I said, my name is Howard Olson. I know a lot about gold. I am an investor in several mining operations. I've been buying a lot of bullion for a lot of years. And for the largest part of my career, 30 years of it, I've been living in all parts of the world, basically training and developing international sales teams. I wouldn't call myself a traditional network marketer, but I haven't met a single person on this planet who doesn't love a simple, low overhead, fun business that produces a residual income. And as an entrepreneur, residual income I found very appealing. And tonight I'm going to show you how to get it. But first and foremost, I want to show you a couple of things that make this opportunity so well timed. I'm going to introduce this company called Karatbars, who has a product called Karatbars that's coupled with an opportunity called Karatbars. And we're literally going to show you how to take some of your existing spending habits, turn them into savings habits, and then show you how to get paid in both cash and gold for showing people a better way to save. It's just that simple. I really believe that we have one of the most potent economic empowerment engines that I've ever seen, and probably one of the most significant, powerful financial literacy programs. So with that, I want to open with a quick question. When you think about most, I was doing a webinar this morning for a bunch of guys in the UK, so Britons, but when you think about most Americans, when you think about most Canadians, most North Americans or people around the developed world, do you think they have a plan to get themselves out of debt and have the ability to retire in the next 3 to 5 years? What do you think? Let me ask you another question. Do you? And even if you do, how is that plan actually working for you? I've asked that question literally thousands, probably tens of thousands of times in the last decade, and the answer that typically comes back is probably pretty similar to what you were just thinking. And if that's true for you, I want to share with you why that is, why there's no shame in it, and what we can actually do about it. Because numbers never lie. They will always tell us the truth as long as we look at the right numbers. So I took a snapshot of typical goods being purchased in a typical home in a typical week, and I tracked them over the course of 20 years, 15 years, 10 years. Now, these numbers I put together just around Christmas, December, so they're only a couple of months old, and they've already risen again. Now, they're Canadian numbers, but we could put in American numbers, we could put in Australian numbers, British numbers, and it would work out the same in percentage terms. A loaf of bread has gone up 959%. Movie tickets are up 483%. Housing in many markets, the one that I'm living in, it was 1,100% as of December. In just the last 2 months alone, it's gone up another 25%. Postage stamps, small spend, but that's still an 800% increase, and milk has gone up 257%. So let me ask you this. Have you seen a 250 to 1,000% increase in the real wages that you can bring home in the past decade? I don't think so. I mean, I know I sure haven't. And the people that I can ask that question to in a live audience, they all pretty much shake their heads. And, you know, I do have a number of people of substantial financial means, people that we would call wealthy. And we all agree on one thing. Our dollars don't go as far as they used to. Our purchasing power is declining. And many people are concerned about their retirements. I want to show, and that's exactly the problem, because the inflation that the government tells us doesn't exist is very real as long as we look at real numbers, not the doctored and manufactured numbers that were fed through the media. And this is why so many people are finding it so difficult to create any real and meaningful savings, to get ahead, to really prepare for their retirements, because that inflation curve is it's right there when we look at our everyday expenditures. You see, most people think that inflation is actually an increase in the price of goods. The increase in the price of goods is nothing more than a symptom. I would like to propose to you that inflation is not an increase in the price of goods. Inflation is a decrease in our purchasing power because they keep printing this stuff called fiat money with no store of value behind it, and the more they print, the less it's worth. But when you look at the price of goods in something that is considered money that has a stable value behind it, you'll notice that the price remains constant over time. And so this is a perfect example here. I want to just take a look at a men's suit. And the reason why I'm using this is because I can track it for 2,000 years. You go back 2,000 years ago, during the time of the Roman Empire, or when Jesus was walking around the Sea of Galilee, okay? Back then, the suit of the day was actually a fine robe, a toga, a fine handcrafted leather belt, and a pair of handcrafted leather sandals. And I can go back into any biblical or historical text, and I know that the price of that suit was 1 gold coin, an ounce of gold. You could have walked into any fine men's shop in 1960, and they weren't wearing togas anymore. Now they were wearing, you know, a jacket, a pair of slacks, a nice shirt, nice tie, handcrafted leather belt, and a pair of nice leather shoes. And that outfit in 1960 would have cost you 1 gold coin. You can walk into any fine men's shop today. Now, do you know what the price of gold is today? Okay, so actually today it's sitting at about $1,240. Let's just make this simple. Call it $1,200. Today, you walk into a fine men's shop. You want to get yourself a nice suit, a jacket, a pair of slacks, a nice shirt, a tie, a handcrafted leather belt, and a pair of nice leather shoes. What's that whole outfit going to cost you? Exactly. About $1,200 or 1 gold coin. And what I'd like to point out here, and what I'm trying to demonstrate, is that the price of that suit has not changed one bit in 2,000 years. It was a gold coin 2,000 years ago, it was a gold coin 60 years ago, and it's still a gold coin today. What has changed is the value of our paper fiat currency because they keep printing it. And so today it takes more of those paper units to go and get eggs, bread, milk, and stamps than it did a decade ago. It takes more of those paper units to get a house today than it did a decade ago. And it takes more of those paper units to get a gold, to buy the gold. But when you price goods in money that doesn't change in value, the price remains absolutely fixed. Why? Because you cannot print it. And that's the problem that we have today. Our monetary system is what's called a fiat currency system. A fiat currency is literally money which is printed out of thin air with no store of value behind it, and it's simply money simply because somebody declares it to be so. Now, we've all heard the word, he's a con man. Do you know what that stands for? It means, it basically means confidence man. And the reason why a confidence man is able to get away with the things that he gets away with is because he gets your confidence and then takes advantage of it. Well, that's how fiat currency works. Fiat currency works not because it has any real value behind it, but because we have confidence that it will continue to buy the things and that it will be honored as legal tender. And it only works insofar as people remain confident in it. And what we now begin to see is that as they continue to print these paper units, our dollars are all weakening because confidence in them is beginning to slip because there is no value. I want to show you a perfect infographic here that just kind of chronicles the history of the US dollar. Now, I know we got people from all corners of the planet here, but this is relevant to all of us because the US dollar is still considered the world's reserve currency. Go up to the top left-hand corner of the screen here, and you'll see 1913. 1913 is the year that the Federal Reserve banking system was created. And what most people don't realize is that the Federal Reserve is not a federal institution. It is not a government institution. The only thing federal about it is the name itself. It is a private bank headquartered in Puerto Rico. It was put together by Senator Aldridge, J.P. Morgan, Chase Manhattan fame, and the Rothschild Banking Group, and a number of others. It is a private bank headquartered in Puerto Rico, not even in the United States, with just a small number of shareholders. And since 1913, a private bank has been dictating global economic and monetary policy. What I want you to notice here is that 1913, the year that the bank was established, $1 had $1 full worth of purchasing power. I want you to come down to about mid-screen here, and what you're going to see is 1944. It's the end of the World War II. The world is now beginning to repair itself. Global trade is on the rise. The United States emerges as the dominant economic power. And to stabilize global trade relations, a series of rules called the Bretton Woods Accord was established, which established the U.S. dollar as the world's reserve currency. And the U.S. dollar at that point was backed by gold. It was actually pegged to gold. There was a fixed exchange rate on it. And all other currencies around the world were then pegged to the U.S. dollar. So in effect, all currencies were gold backed through the U.S. dollar as the world's reserve currency. And that worked fine for a number of years. But I want to take you now down to 1971. The United States is embroiled in the Vietnam War. It was a hugely costly war, both in human terms and in economic terms. And the U.S., for the first time in its history, went into massive deficit spending. They were spending more than they had currency to spend, than they had revenues coming in, and they were unable to pay their war debts. And the only way to do this, listen, when you have a gold-backed currency, you cannot just print more currency because you need it. Because what happens in a gold-backed currency system, every note in circulation represents an equal proportion of gold in the vault. And the peg in 1971 was that each US dollar in circulation represented 1/32 of an ounce. And so if you need more money, if you need more currency, you can't just print it. If you need to print more currency, you need to put fresh gold in the vault to represent the new currencies which have been created. The U.S. didn't have any more gold. So in 1971, Richard Nixon closed the gold window, took the U.S. dollar off the gold standard, and fired up the printing press, and they've been printing away our purchasing power ever since. But this is not just a U.S. problem, because Bretton Woods is still in play. And under the Bretton Woods Accord, every currency was pegged to the U.S. dollar. So when Nixon pulled the peg on the U.S. Of gold to the U.S. dollar, he essentially pulled the peg of gold to every other currency. And since 1971, pretty much every single country in the G20 bloc has been printing more and more and more of this fiat currency like there is no tomorrow. And that's exactly where our purchasing power is going. The more of these things that go into circulation, the less they're worth, which is why the cost of goods goes up. Not because the price itself has gone up, but because the value of the currency has gone down. And if we just continue across this chart here, you'll see it. This chart only shows up to 2013. In 1913, a full dollar had a full dollar's worth of purchasing power. By 2013, it was down to 5 cents. Today, it's down to about 90. It's about 2 cents left. We've lost 98% of our original purchasing power. This is another interesting way to look at it. This graph shows you the increase in U.S. money supply over time. Okay, now it starts in 1965, and I just want you to follow this red line over to 2008. What was 2008? Well, that's when we had the last major financial crisis. That's when we had the banks that were too big to fail, the mortgages all collapsed, and the government came in and bailed out the banks. Who did they bail out? Chase Manhattan, Citigroup, Bank of America, the same guys that are shareholders in the Federal Reserve. So they printed more money, printed by the Fed, used it to bail out the bankers, and that started the first round of bailouts. The bailouts ended, and then the Federal Reserve began what they called quantitative easing, a fancy term for we're going to print more money. We had QE1, QE2, QE3, and what's happened in the meantime, basically up until 2008, the United States had $825 billion worth of currency in circulation. In 2008, they started the QE programs and all the bailouts, and from 2008 to current time, 2016, they've quadrupled the money supply, all of it fiat, unbacked money. There is now close to $4 trillion of currency floating around, and you want to know where your purchasing power has gone. It's gone to these floating, phony fiat dollars. But this is not just a U.S. issue. Look at these charts. I can show you pretty much every chart of the increase of money supply in every G20 nation. And look at that, 2008, Canada, China, India, Australia, Russia, Singapore. all of those currencies have been massively inflating. In fact, the true definition of inflation is an expansion of the money supply. And that's what we've got here. And when you expand the money supply with no store of value behind it, you lose your purchasing power, supply and demand. You got too many of them, they're not worth anything anymore. That's what's happened to our purchasing power. I think this is a profound quote. This is what J.P. Morgan said. Now remember, the Federal Reserve opened its doors in 1913. J.P. Morgan himself of the J.P. Morgan Chase Manhattan, one of the original founders and architects of the Federal Reserve. Here's what he said: gold is money. Everything else is credit. And if you understand how they create money, it goes like this. The government issues a bond or a treasury bill. The Federal Reserve buys it, takes it in as an asset, and against that bond prints money. And by nature of this whole relationship, every new dollar that gets created is a new dollar of debt. In fact, the entire quote from J.P. Morgan says, gold is money, everything else is credit. And once you understand this fact, you'll never be poor again. So let's take a look at a couple more things. See, gold is money. For 5,000 years, gold has been used as money, and today, in fact, it is still money. All of the central banks hold gold on their balance sheets and as their asset class to settle debts amongst themselves. So if gold is money, it's not an investment. And the problem is, many people try to compare gold to an investment, but gold is not an investment. It is just a different form of money, so it needs to be compared to other forms of money, namely our other fiat currencies. And once we understand that gold is money, it then starts to make sense that the price of gold neither rises nor falls. It's the currencies around them which are constantly fluctuating. So when it is said that the price of gold has gone up, what it really means is that the value of the currency has gone down, and it takes more of those currency units to get the gold. When it is said that the price of gold has fallen, it's because the currency has risen in value. And what's been happening in recent days, in fact, let's put a delineation mark on this. Up until about Thursday of last week, it was said that the U.S. dollar was strong. And it wasn't really because there was any strong fundamental in the U.S. economy that kept it strong. It's because all the other currencies inside the G20 had all been following. The majority of them are resource-based currencies, and their values have been plummeting, which gives the appearance that the U.S. dollar is strong, and gold is priced typically in U.S. dollars. So let me give you a very real example here. You know, I have been buying a lot of gold for a lot of years, and if you just go back to 2011, an ounce of gold was $1,200 US dollars, and in 2011, the Canadian dollar and the US dollar were almost an equal exchange. So in 2011, I could buy an ounce of gold for $1,200 US dollars, or I could buy it for 1,200 Canadian dollars. In the meantime, it was said that the price of gold dropped to $1,100 in US terms. But at the very same time, the Canadian dollar also dropped 40%. And so while I could buy gold for $1,200 an ounce in Canadian dollars in 2011, by the time we got to 2015, even though the price of gold had dropped $100 an ounce, it was still costing me $1,500, or a 35% increase in that same period of time. It's the currencies that had fluctuated. It's the gold that remains completely constant. Gold is a store of value, and it's the only way to protect your purchasing power. So the price of gold in real value terms remains constant. And I want to revisit just one quick slide. Remember I showed you the example of the suit? Look at this. In 1936, an ounce of gold was $34.87. And in 1936, an ounce of gold would get you a new suit, a pair of leather shoes, it would give you a full tank of gas, buy you a couple of concert tickets, and dinner for you and your girl. Today, an ounce of gold will get you a new suit, a pair of leather shoes, a full tank of gas, a couple of concert or movie tickets, and dinner for you and your girl. Nothing has changed except the price in dollar terms, but the price in gold is exactly the same. So gold is a store of value. Now, I find this very curious. Alan Greenspan, the former chair of the Federal Reserve, okay, he's the one that started all of this quantitative easing, QE1, QE2, QE3. Greenspan started that, and here's what he said. He who owns gold owns money. In the absence of gold, there is no way to protect your savings from confiscation through inflation. And that's exactly what this is. It's inflation the confiscation of your purchasing power, which penalizes savers and steals our purchasing power, which is why so many people are finding it so difficult to get ahead. You know, Voltaire, the famous author, philosopher, playwright, he watched the French fiat currency implode twice in his own lifetime, and here was his observation. Paper money will always return to its intrinsic value, zero. So let me ask you this question. You live in a home, apartment, condo somewhere. Do you have some form of homeowners or contents insurance? I bet that you do. Medical insurance, do you have some form of that? Of course you do. And what about automotive insurance if you're driving a vehicle? Yeah, of course. You have no choice, right? Well, what about money insurance? Do you have any of that? And so you might be thinking, well, Howard, what are you talking about? Money insurance? Well, I think you've clued in now what we're talking about here. We're talking about gold. So let's look at a couple more numbers here. All right. Since the Great Depression in 1932, under the Federal Reserve and the central banking systems around the world, the dollar has lost 98% of its purchasing power, while gold, the vehicle that once backed our currency, does not anymore, has risen in value by more than 4,300%. That's staggering. We could look at it like this. If you had $100,000 worth of cash in 1932, the purchasing power of that currency today would be just $2,000. Let's bring it right home. What we're really saying is it takes $100 today to purchase what $2 would have bought you then. That's inflation, a decrease in purchasing power because of an increase in the monetary supply. We could also look at it like this. If you took that same $100,000 in 1932 and used it to acquire gold, let it sit and accumulate no interest. Today, the purchasing power of that gold, now this slide was put together when gold was at $11.50 an ounce. Today, at today's number, that gold would be worth $4.3 million. Since 1932, gold has outperformed cash currency by more than 4,300%. That's just the truth. The numbers don't lie. All right. So you've seen we're talking about gold. Gold is real money. It is a true hedge against inflation. But the fact of the matter is less than 1% of the people on this planet actually hold physical gold. 1%. Who is that? Well, we've all heard about the 1% versus the 99%. Well, 1% of the people, what do they know? Well, they know that gold is money and they know that it holds its value, and that's where they put their cash. Only one. Now, by the way, 2 weeks ago was the World Economic Forum in Davos, Switzerland. And you know what number came out of that conference? Here's a significant number. There are 60 people on this planet today. 60 individuals own more wealth together than 50% of the rest of the world combined. Did you catch that? 60 people have more money than 50% of the rest of the world combined. That's the 1%, and those guys are all sitting on gold. So why is it that only 1% of the people have gold? Well, here's why. There's a couple reasons for it. First of all, it's unaffordable. Listen, at today's price, whether it's $1,200 an ounce or $1,250 an ounce, most people don't have a spare $1,200 in their pocket that they can go off and go get an ounce of gold at a time to create any real and meaningful savings out of it. They're intimidated about it. Part of the mindset is, well, if it's $1,200 and I can't afford it, what's the point? Why even bother starting? So it's unaffordable to many people. Secondly, it's inaccessible. Many people just don't know where to get it. So where do I find it? And once I find it, what do I do with it? How do I keep it secure? How do I keep it safe? And what do I do with it once I have it? And lastly, there's a third issue with it. It's difficult to use in its current format. I mean, you can't just go down to the gas station or the grocery store and give them an ounce of gold and expect change in return for your next tank of gas or your next loaf of bread. It just simply doesn't work that way. We still live in a currency-driven economic system. So clearly, gold is the answer in terms of being a store of value and being completely inflation-proof. But we need to get it into a more usable format, and that's what we're talking about here tonight. There's this beautiful company based in Stuttgart, Germany called Karatbars that has created a product which are called Karatbars. So what is a Karatbar? Well, Karatbars are small denominations of gold that are produced in smaller, more affordable, easy-to-use, transaction-friendly formats. And by producing it in 1 gram, 2.5 gram, and 5 gram increments, as opposed to an ounce, it now becomes accessible to people around the world who couldn't previously afford it or perceived that they couldn't afford it. So let me tell you about the Karatbars. Okay, each one of these Karatbars is it is 24 karat 999.9 currency. Well, there's no such thing as currency grade, but it's basically gold bullion produced in an LBMA accredited refinery. So what is the LBMA? The LBMA is the London Bullion Market Association. They are the regulatory body that oversees global gold trade, but they also are the body that accredit the refineries that produce the purest form of gold that's actually held by the central banks themselves. They produce bullion, okay? Every carat bar comes out of an LBMA accredited refinery. And if there are 200 refineries on the planet, there are less than 20 that are on the LBMA good delivery list. Carat Bar's gold comes from that good delivery list. It's 999% pure. Every one of them have security features on it. So there's a hologram technology on here. Each one is individually, uniquely serial numbered. It has the LBMA stamp on it. And there is what we call a unique nanotechnology DNA, which basically, as long as this gold has never been removed from this card, it validates the authenticity of the assayer's signature, which validates the purity. And I'll tell you what I did. When I got my hands on my very first piece of carat bars, I went down to the bullion dealer that I've been working with for a number of years, and I simply handed them one of these things. Now, they know my face when I walk in there. We've bought a lot of gold. I've got some, 100-ounce bars and several 10 ounces and ounces and all kinds of things. And Darren came and approached me. Hey, Howard, how are you? And I said, well, listen, Darren, I got a question for you. I need to check something out. So I gave him a carat bars. He'd never seen one before. And I said, Darren, if I gave you one of these and I asked for currency in return for it, if I asked for cash, would you give me cash for it? He says, I don't know. Let me see it. So he took it up and he looked at it under the light for a minute, put it under a microscope, looked at it, scratched his head for a second, put it under, in fact, I'll just show you a picture of it here. This is called an SDNA reader. It is basically a piece of high-tech gadgetry that can read the intrinsic properties of any element that comes off of the periodic table. They have these machines in the shop, and by the way, we at Carat Bars have them also. He put this gold under the DNA reader to test the authenticity of the purity of gold. He looked at me. The whole thing took about 3 minutes, and he said, I'd give you cash for that in a heartbeat. And I said, how much? He said, whatever the market value of gold is today is what I would offer you for it. And I asked him specifically why. He said, I see the LBMA stamp. I see the assayer's signature. My machine here has validated the purity of that gold. That's as good as cash as far as I'm concerned. That was 2 years ago, and that's the day that I knew I had my hands on a winner, and I rolled up my sleeves, and I've been going at it full on, and I've made it my mission to help people understand the true nature of our inflation-ridden currency and why they need to start saving in gold. And it's just been a beautiful, brilliant business pretty much ever since. And lots of the friends that I've made through this business are on this call actually right now as we speak. All right. So what is this whole program? Well, the entire program comes down to one simple idea. We're actually not even selling anything except for a concept. Okay. The whole idea behind Carat Bars is that if our paper dollars are declining in value because they are fiat currency and they're printing more of them and gold actually holds its value, we show people how using a beautiful, simple e-commerce mechanism, they can go set themselves up with a free gold savings account and then just simply begin exchanging paper currency units for gold in a more stable savings vehicle. And what do you do with your savings? You just save. So you get a gram a week, get a gram a week, get a gram a week, get a gram a month, whatever increment you can, okay? And if this were a live seminar where we were a live audience standing in the same room together, what I would do at this juncture is I would look out to the group and I would pull a $1 US note out of my pocket. And I would look out to the audience and I would say, who out there can break this dollar into 4 quarters for me? Well, sooner or later, somebody raises their hand and says, sure, I can do that for you. So I approach the individual. I give them my $1 note. They give me 4 quarters in return. I go back up onto the stage and I look back out onto the audience and I say, what just happened here? Did I actually just buy something from that person? And everybody goes, no. And did he just buy something from me? And they all say, well, no. Well, what happened? Well, you basically exchanged $1 for 4 quarters. Exactly. And that's exactly what this whole Carat Bars program is all about. We're going to exchange our declining dollars for a different form of money, i.e. gold, and just save them and hold them, save them and hold them. And what do you do with a savings account? Well, you keep saving until you've reached your savings goal, and then you exchange these gold units back into cash at the time you need it, having fully hedged yourself against the ravages and the destructive powers of inflation. That's what this program is really all about. And I'm going to share with you now why 1 gram units are so critically important. And I can tell you, this is coming from somebody who owns many, many, countless multiples of ounces. I want to take you back to 1971, just before Nixon pulled the gold standard. Okay. 1971, if you had 1 gram of gold, it would buy you 5 loaves of bread. In 1971, if you had $1, it would get you 4 loaves of bread. Pretty even exchange, and I'll explain exactly why. Because the peg to the US dollar was that every dollar note in circulation represented 1/32nd of an ounce. And it takes 31 grams to make an ounce. And so you can see here, you got a pretty fixed exchange, almost an even transaction here. Let's fast forward to current moment in time. Today, 1 gram of gold will get you 20 loaves of bread. $1 won't even get you a couple of slices, if you're lucky. And the point is, it's gold, not paper, which is true, sound, inflation-proof money. But now I want to talk about why these 1 gram units are going to be so critically important. I mean, listen, the Dow Jones just dropped 40 points today. Gold has gone up $100 in just the last week. Our currencies are beginning to devalue, and the truth of what's happening in our economy is starting to come out. Banks are teetering, all the bank stocks are down, and the US dollar is starting to wane. In fact, many nations have now said they're not going to accept US dollars for oil trade anymore. And when that happens, we're going to enter into a period of what's called hyperinflation. Hyperinflation simply means prices begin doubling at an escalated and rapid pace, okay? And if you think it can't happen here, it is going to happen here. In fact, in Canada, it's already begun at some extent. It's happening in Brazil right now, in Colombia right now, in Argentina. Hyperinflation has hit. Their price index is up 600% this year alone. And you can go to Russia. They're experiencing hyperinflation, and it is coming here now. All right, and here's why these grams are so critically important, because here's the thing. If you're saving your money in gold, which we've now proven, I at least hope we've demonstrated, holds its value over time. If you only have ounces, you cannot just chip off 1/4 of an ounce. You have to give the bullion dealer the entire ounce, and they give you currency in return for it. And when we start entering a period of hyperinflation and these prices begin rapidly escalating, so let's suppose I've got an ounce. I take it to the bullion guy. He gives me $1,200. I've now got $1,200 worth of currency in my pocket. I only need to spend $200 of it. So I spend $200, leaving me with $1,000 worth of unspent currency in my pocket. In a period of hyperinflation, when the prices begin doubling every couple of days, any dollars I don't spend today lose half their value tomorrow, lose half their value again the day after that, until finally the currency in my pocket is worth nothing because the prices are going up so quickly. The beautiful thing about grams of gold is because even at a gram, it still holds its value. So this gram of gold represents to me a tank of gas or a basket of groceries 5 years ago. It's a tank of gas or a basket of groceries today, and it's a tank of gas or a basket of groceries 5 and 10 years from now. This truly is spendable, daily, transactable gold. And on top of all of that, Karatbars has built an e-commerce mechanism where we have actual merchants who will accept your physical gold or convert it back into cash if you ask them for it, or using the Karatbars system, hold your gold, store your gold, get your hands on grams, hold the gold, and then using the e-commerce platform, liquidate it back into cash at the time that you need it, in the increments that you need it, so that you're not destroying your purchasing power with unspent currency. That's what this is all about. It's beautiful. So at the end of the day, what we've really got is a pay yourself first savings program. And if you ask anybody of substantial economic means or wealth of any nature, and you ask them how they made their money, they're all going to have different ways they made their money, different businesses, different investing. Some will have inherited it. But if you ask them how they managed to stay wealthy, there's going to be one common denominator, and it comes down to this. It's not how much you make, it's how much you keep. It's not how much you make, it's how much you keep. And when you come into money and when you come into assets, put aside at least 10% and learn to live on 90%. Put aside 10% and don't touch it, just hold it. And that's what this program is all about. It's about giving you a mechanism through which you can save, so you can inflation-proof yourself and literally begin to get ahead of that inflation curve and preserve yourself for your retirement. So this is a savings program. And if this is a savings program, let me give you a savings comparison. Let me show you what this looks like. Let's suppose that you had decided to put aside $300 a month and did that for the course of 20 years. Well, $300 a month, $60, $70 a week, $300 a month for 20 years. At the end of 20 years, you would have set aside $72,000 worth of cash. Unfortunately, because of this inflation, which we've now I hopefully have demonstrated is very real and ever present, the purchasing power of that 72,000 would be 56,000 in today's terms, or a net loss of $16,000. Let's just suppose that you had decided to take that same $300 a month, set it aside, instead of putting it into cash in a bank account, put it into gold. Well, at the end of 20 years, you still would have set aside $72,000 worth of cash, except that cash is now held in gold. The value of that gold today would be $236,000, or a net increase of $164,000. Now, when you see this, can you see the implications of this towards your retirement or your children's education or anything else that you might be preparing for? I mean, I certainly could, and I had a conversation with a lady just a few weeks back, and she says, well, I'm thinking about putting $10,000 aside for my grandchild's education, university education. All right. When will they go to school? I asked her. Well, in 10 years. Okay. If you put $10,000 into the bank today at the current interest rates and with the bank fees, will you have more or less than $10,000 10 years from now? She thought about it for a second. Well, I'll have less. Okay. And in the very same period of time, do you think the cost of that education will go up or go down? It'll go down. So what good is $10,000 in cash going to do you? She said, good question. I said, what if you had take that same $10,000 and put it into gold? Do you think you might at least preserve your purchasing power of that? Yep. And do you think that there's a good chance that relative to currency, it might be worth more? Probably. And that's exactly what she did. And that's the lens that we need to look at. Gold is just a different form of money, but it's inflation proof. And that's what this is all about. That's what this is all about. So let me ask you this question. How would you rather save? And I'm just going to let the graphics speak for themselves. And I certainly know what my conclusion has been. And for the last decade, I have been saving in gold every single month. And when I discovered the power of Karatbars 2 years ago, I jumped into this because not only did I understand the power of saving money in gold, I understood the power of leverage and residual income. And I also understood that I had a lot of people that needed and wanted gold, but perceived they couldn't afford it. And with this program now finally could. All right, so what we've actually got here is a beautiful economic engine that will enable you to truly save money and probably for the first time in many people's lives, genuinely accumulate wealth and eventually protect their purchasing power using a very simple 3-step plan that all you nearly need to do is convert some of your existing spending habits, turn them into savings habits, and then get paid in both cash and gold for showing others how to do the same thing. So what's step number one? Step number one, open a free gold savings account. Yep, you heard me right. Free. It costs nothing to open this thing up. It's just like opening an account at the bank, except there's going to be no service fees on it. Step number two, if you believe that saving money is an important and valuable thing to do, start acquiring gold by the gram. Get a gram a week or a gram every couple weeks, or get a couple grams a week, whatever frequency and whatever quantity makes sense for you. There are no obligations. It's a completely self-directed savings program. And step number three, if you like the idea of leverage and residual income, become an affiliate and refer it and share it with others, and the system will begin to pay you in both cash and gold for having done that. It's a beautiful thing. So why is this so important? Well, as we demonstrated in an earlier slide, inflation is very real. And in fact, all the studies are telling us that when we take into consideration current levels of inflation, our incomes have been stagnant and declining for the last decade. In fact, most people, when inflation adjusted, are on the same income today as they were in 1999. Now, you think about that. Are you better off, or are you worse off, or are you the same as you were a decade ago? Most people would say you're decade, and that's exactly the problem. It's impossible to outrun exponential inflation on our declining linear incomes. The purchasing power is shrinking. And what Karatbars gives us is an economic empowerment engine that provides us with cash flow in addition to whatever else we're doing, so that we can finally create some additional income to use that additional income to begin saving. And when we begin saving and sharing with others, the system will literally begin paying us more cash and more gold for doing it. It is the most beautiful thing I've ever seen. And I hope that I'm not the only one that's this enthusiastic about it. I mean, this is a beautiful thing. So let me show you how the money works. Because as my friends Parmy and Hitton in the UK, we got this massively growing organization there. They say, nice presentation, Howard, but show me the money. So let me show you the money, okay? There are 7 ways to get paid. There are 7 distinct income streams inside the Karatbars compensation model. The beautiful thing is all 7 of these streams work in concert with each other simultaneously. And of these 7 income options, 5 of them are included in your free account. So when you set up a free account, Karatbars instantly enrolls you into the first 5 income streams in what's called the Unilevel system, with no obligation for you to do anything else. That's a beautiful thing. The second 2 income streams are part and parcel of what we call the optional dual team system, which is there for people who want to create a business opportunity out of this. So let me show you how it goes, okay? But I want to begin with this, and I'm going to say it very emphatically. The entire Karatbars compensation model, the entire business is predicated on one foundational principle. We save money first, and we make money showing others a better way to save. We save money first, and we earn money showing others a better, more inflation-proof way to save. What we're really doing here is creating a culture of savings and a community of savers. And it's just a magnificent thing because we're actually building our futures, our retirements, doing it together, and it's not costing anybody anything. The entire program here is your personal savings account. So the compensation plan is broken into 2 major components, okay? Component number 1 is what we call back-end monthly residual income, and we all need and want residual income, okay? And then the front end is what we call powerful weekly cash flow that comes out of the dual team system. So let me show you how these 2 things work. All right, so let's suppose that you have decided, okay, this is a good idea, gold makes sense, I want to create a savings account, so you set yourself up with a free gold savings account and you become a free affiliate with a gold savings account. Well, the very moment you did that, Karatbars also introduced you and entered you into what's called the Unilevel compensation plan. You still haven't spent anything. There was no obligation. It came free with your free account. And the minute you did that, Karatbars put you in the Unilevel system, and I like simple metaphors. I simply call this your personal referral box. And at the end of every single month, if you just simply refer a couple of people to this, Karatbars will pay you between 0.5% and 6% on the sum total of all goods and services that get purchased each and every month. Now, here's what I want you to recognize. You're outside of the personal referral box because you cannot earn a commission on your own purchases. Totally reasonable, completely makes sense. But anybody you refer and anybody they refer becomes commissionable earnings for you. So let me show you how this works. So you've opened up your free savings account, you got your personal referral box, and then you refer a couple of people, okay? And then let's just say that those 2 refer to, and those 2 refer to, and then those 2 refer to, and on and on. And over time, your personal referral box just fills up with people who have switched on to this whole idea of saving gold, okay? Now, in this example, I showed 2 who get 2 who get 2. Listen, in a perfect world, it doesn't always work that way. Some are going to find 2, some are going to find dozens upon dozens, and some are going to find none. But the beautiful thing is there's actually no obligation to find any. I just gave it as an example. If you only found 1, so let's just suppose that you found this person right here, and this person then found this person and this person, and each one of them found a few. All of this becomes part of your organization, even though you only ever found 1. Of course, the more you find, the bigger your organization, the size of your organization comes down to the number of people got referred in. But the beautiful thing is, unlike typical MLMs, there are no monthly obligations or qualifications here. It's just based on the total volume of sales that get produced as a result of that referral that you made. And it pays every single month. That's a beautiful, beautiful thing. I'm going to say it again. This whole program works because we save money first, and then we earn money showing others a better way to save. And that's how you build your pension plan, folks. The second part of the compensation plan is what we call the dual team affiliate plan. Now, this is optional, and this is for people who want to become business builders, who actually want to build it, whether full-time, part-time, spare time. It doesn't matter, okay? Now, the word dual gives us a couple clues here. Dual means 2. So here's what's going to happen. In addition to the personal referral box, everybody you refer to Karatbars goes to the personal referral box, but they're also going to come into the dual system. And here, we're going to build 2 teams. We're going to build a left team and a right team, and it also pays 2 additional income streams. So the dual team system pays 2 teams, 2 more income streams, 2 teams, 2 more income streams. Let me show you how it works. All right. To participate in the dual team affiliate plan, you need to become a Karatbars Dual Team affiliate. And the only way to do that is to acquire one of the Dual Team affiliate packages. And there are 4 of them. Okay, so there's a VIP package, a gold package, a silver package, and a bronze package. Now, we call them packages, but really what they are, this is a business license that enables you to become a full-fledged Karatbars affiliate, earning an income out of this. It's a business license. It's a one-time business fee. And the package that and the reason why we call it a package, first of all, is because this business license then becomes packaged with a number of sample product and marketing and business building tools. All right. Now, here's what I want you to understand. In the Dual Team system, the amount of income you earn is a function of your affiliate status. Your affiliate status is a function of this package that you chose. So let me show you how it works. Okay, so here are the 4 packages once again. The starter package, the bronze package is 125 euros, silver 345, gold 780, and the VIP is 2,000 euros. One time. You don't renew it every year. You don't renew it every month. It's a one-time acquisition. The first income stream is what's called a direct package bonus. And this is just simply a way for Karatbars to reward you, thank you, and compensate you for referring a new business partner to the Karatbars marketing team. Okay? So here's how this goes. You decided to become an affiliate, and if you're a bronze affiliate, you earn 5% of all those transactions. If you're a silver, you earn 10%, gold 15%, and VIP 20%. I looked at that and I said, wait a minute. I can have 5 or I can have 20. It's the same call, same webinar, same introduction, same everything. That's a 400% difference. That's actually an 800% difference. So for me, it made sense to get the VIP package. Let me show you how this works. Okay, so let's suppose that you're an affiliate. Forget about what status you have. You are an affiliate and you refer a new business partner who decides to become a VIP affiliate. Okay, the income that you earn here is a function of your affiliate status. Remember, so your new affiliate just bought the VIP package. If you were a bronze, you would have earned 5% or 100 euros. If you're a VIP, you would have earned 20% or 400 euros. And I looked at that, I said, I can have 100 or I can have 400. To me, it just made sense. The VIP package simply made sense. But because this is a program about getting people holistic, financially whole, and out of debt, off the debt wheel. We don't want anybody going into debt for this. So listen, start where you can. Pick up a gold package, for example, and upgrade to the VIP later. But the bottom line is you want to get to the highest package as soon as you can, simply because you have larger incomes here and you don't want to be leaving money on the table. Okay, so this is a one-time payment. You don't share it with anybody. You don't share it with an upline. You don't share it with a downline. You don't share it with anybody. It's a direct payment from Karatbars to you. Thanks for expanding our marketing network. Okay, that's income stream number 1. Income stream number 2 is what is called the Dual Team Cycle Bonus. And this rewards team building activities as the organization down left and right are beginning to grow. And it's the same thing here. The amount of income you earn is a function of your affiliate status, and every product in the Karatbars system has what's called units attached to them. So everybody goes, well, what's a unit? All right, let me make this really simple. Units are nothing more than an expression of profit margin. You could go to the grocery store, buy a loaf of bread, probably has a small profit margin. Buy a jar of imported jam, has a higher profit margin. So units are just a way of expressing the different levels of profit margin that get shared out into the field with you and me. Every product has profit margin. So here's how this goes. A gram of gold has profit margin, 1 unit. 5 grams of gold, 3 units. VIP packages, 100 units. The small bronze package has 5 units. Every time you accumulate 75 of these units in a 25-50 split, and I'll show you graphically in just a second, every time you accumulate 75 of these units, you get a cycle payout. The size of your cycle payout is a function of your affiliate status. So if you're a bronze, every time you accumulate 75, you get 10. If you're a gold, you get 60. And if you're a VIP, 80. It's the same 75, but the bonus is a function of your affiliate status, okay? So let me show you in functional terms how this goes, okay? So you've already got your personal referral box, and that's building on the back end on a monthly basis. This happens on literally an hour by hour, and then it pays on a weekly basis. So here you are. You decided to become an affiliate with a package, and now here you start. And so you have a conversation with your friend George, and you tell George, hey, listen, I found a way to get gold. I found a way to have it subsidized by a system, and it pays residual income. George takes a look, watches a presentation like this, makes sense to him, and he acquires a VIP package, and that puts 100 units on your left team. Okay, now no cycle bonus yet, because the 75 units need to be in a ratio of 50 to 25 or 25 to 50. Karatbars doesn't care whether it's coming left or right, but it's always 50 and 25 that trigger a payout. So those 100 units just sit there now waiting for something else to happen. A couple of days later, you talk to your friend Bruce. He says, great idea. He becomes a gold affiliate, and that puts 50 units on your right team. Karatbars calculates it 2 by 50, 2 by 25, and now there's 2 cycles. And if you were a bronze, you would have got 2 by 10 euros. If you were a silver, 2 times 40. If you're a gold, 2 by 60. And in this example, as a VIP, it's 2 times 80 euros, and 160 euros drop into your account. Okay. Now, let's not forget, you are also the referring affiliate, which means that you get the direct package bonus. So if you were a bronze, you would have got 5% of George's and Bruce's golden VIP packages. You would have got 10% as a silver, 15 as a gold, or 20 as a VIP. In this example, as a VIP, you get 20% of George's VIP, and you get 20% of Bruce's gold. And there's another 556 euros that drop into your account to be paid out on Friday. And that's how this goes. A couple of days later, George talks to Francis over here, and Francis now becomes part of Bruce's left team, but also part of your right team. George talks to Julie. Julie gets a VIP package, 100 units. Julie and George have a bunch of conversations, and they start to build out their organization. Now 570 units are sitting there. All right, now here's what I want you to watch. Go down to the lower left-hand corner of the screen. See that guy with the briefcase? No, that could be a girl, but I think he's a guy, okay? He's wearing a tie. So there's 100 units sitting here. Well, when he got that VIP package, not only did 100 units trigger there, but everybody above him got those 100 units as well. Everybody gets the 100 units, and that's including you, by the way, right here. So 100 units go all the way back up, and now they just sit there and wait until some units show up on the other side to balance them out. 300 units show up over here. Karatbars calculates it. 11 cycles. You get 11 payouts. If you're a VIP, 880 euros drop into your account, and that's how this works. And as this thing just continues to grow, that's how you're creating your weekly cash flow. What I want you to understand from this illustration is that both of these systems are working together, paying weekly and monthly. Both systems are operating in concert with another. Every time you refer somebody to Karatbars, they go into your personal referral box, and they also land on either your left or your right team. Refer another one, they go into your referral box, left or right team. Find another one, also into your personal referral box, left and right team. And then they start finding some people. They go into your box and into your left or your right team. And that's how this works. 2 systems working simultaneously, paying you 5 pay cycles a month. It is a beautiful, magnificent thing. And because we are a gold savings company, gold is also part of the compensation package. So the cash portion of your commissions get put onto this prepaid MasterCard every single Friday, and you can take it out through ATM machines, use it at a bank. But every time you trigger 200 euros in commission, Karatbars will acquire for you 1 gram of gold and pay the balance in cash on that MasterCard. 1,000 euros, 2 grams of gold, balance of cash. 3 grams, at 2,500 euros, 3 grams of gold acquired, balance of cash onto your card, and 4,000 euros, 4 grams of gold is acquired for you, balance of cash. Now, here's what it looks like for me personally and for many people that are already on this call. You know, when I first started this, I started my gold savings program, and I began to acquire 1 gram a week. In fact, I started with 2 grams a week. I get 2 grams a week every single week, and I continue to do that to this day. Except the grams that I'm buying on my own, I'm actually purchasing out of commissions that I've earned. And in addition to all of that, Karatbars is kicking in cash and extra gold. I can tell you I haven't paid for 1 gram of gold in over a year now, and that's how this works. Cash and gold paid for by the system. And the most beautiful thing is there's no spending, no storing, no inventory, just saving money and protecting your wealth. And so you might be thinking to yourself, what do you mean no spending? I still have to buy the gold. Well, wait a minute. Remember, we're not actually buying gold. Gold is money, and all we're doing is converting declining paper. We're exchanging paper for gold. Okay, that's the product. So we're really not spending any money. And if you're doing this with commissions earned, you're really not spending any money. We're just saving money, protecting our wealth, showing others how to do exactly the same thing. It is a beautiful, beautiful program. I want to give you a couple of words on where the company has come from, where we're going, our current status, and then we'll just wrap this thing up, open up the line for various questions if you have them, okay? So the company was founded in Stuttgart, Germany in 2008 by a gentleman named Harold Zeitz, multi-millionaire, made his money in precious metals and in insurance, and recognized that his wealthiest clients were all in gold and the non-wealthy clients weren't. And he understood the power of gold, the power of leverage, and decided that he wanted to walk away from what he was doing and create a company to make it possible for people around the world, to really get gold into the hands of the masses. Established the company in 2008, posted a 35 million euro bond with the German government to establish a precious metals company with an e-commerce platform tied to it. From 2008 to 2011, created the infrastructure to make this company work, started forging relationships with the LBMA refinery so that we could get the finest, purest form of bullion on the planet into your hands, opened the doors for business in 2011, and in year one, we did 2.2 million euros in turnover. In year two, we quadrupled to 8.5. In year three, we quadrupled again, did 30 million euros in turnover, and we just got the 2015 numbers. In 2015, we did 45 million euros in sales. Of that 45 million euros, 20 million was paid back out into the field in commissions to people like you and me. We are currently around the globe sitting at 360,000 affiliates. We operate in 123 countries, and if you understand that there are 7 billion people on this planet, we are just getting started. But there's something else I want to help you understand. Okay, we are part of what's called the Synergy Gold Group. We have the fastest growing marketing team in the entire company. We are about 40,000 affiliates around the globe, so we represent about 12% of the total number of people. But of that 45 million, we did 20 million in sales last year. So we represent 12% of the people in terms of numbers of people, but we represent 50% of the total company's sales. So all I would like to suggest to you is that, first of all, in terms of a growth curve of the company, we're sitting right here and we are about to go into hypergrowth. So you're at the right place at the right time with the right team, with the right duplicatable systems that will help you really grow a business out of that. And that's really all I want to say about that. This is Harold Zeitz. I've met him 3 times now. He is the founder and the CEO and the chief visionary of this company. And last time I met him, I simply said, you know, Mr. Zeitz, I just really want to thank you for doing this. And he looked at me and he basically said, you know, he says, Howard, you're welcome. I want you to know something. I don't do this for me. I'm financially well taken care of. I'm doing this for you and all those people that we haven't met yet, because it is genuinely my goal that with this company, we're going to help millions of people find true financial freedom and finally escape our current system of debt. And you know, we all have a skunk detector built right into us. And when you look at somebody's eyes and you hear the tone of their voice and what they're speaking, we all know whether it's genuine or not. And I can tell you that was the most genuine thing I ever heard a human being say. This guy means it. We're on a mission to emancipate people from the system of debt, and that's what we're doing. So with that, I say, come and behold the power of gold. Come and join us. We are creating a debt-free and financially secure society, beginning with you and then with me. And we have the tools, we have the system, and we have the know-how to teach you and train you and mentor you all the way to success. And it would be our pleasure to do that. So with that, I'm gonna open up the microphone. In fact, it's just gonna be Hal and I on the microphones. But what you'll see here is there is a chat box, and if you've got a question, what I'd like you to do is just type it into the chat box, and I'll read your question out loud to the rest of the group, and then I'll answer it live. Because listen, if you're thinking it, somebody else might be thinking it, but too shy or reserved to ask the question. So ask the question. We'll answer it and make sure that your curiosities are satisfied.
All right. Before you take any questions, have everybody seen one of these before? This is one of the latest products that Karatbars has developed, and it's called Karatbars Cash Gold. And this is a unique product because it's 0.1 grams. So really what Howard was talking about before, about having something that's divisible when you need change, this is worth about 2 loaves of bread, right? Wouldn't that be cool if things go to hell in a handbasket and all of a sudden you needed to buy 2 loaves of bread and you had one of these? it's a 0.1 gram of gold embedded in the middle of this this gold cash. So that's really cool, and these are available now as well. Yeah.
Yeah, there you go. Well, so there are some questions here. I'll just make another comment to that cash gold thing. So what Karatbars has actually done here, I love simple metaphors and I love simple analogies. Okay, so we have 1, 2.5, and 5 gram bars. I think of it like this. I think of the 1 gram is my $50 bill. 2.5 grams is like it's worth more than 100, but just simple analogy. Remember, the 1 gram is my $50 bill. The 2 gram is my $100 bill, and the 5 gram is my $300 bill. Okay, I think of it like that. And then when you look at this cash gold that Hal just showed you, the 0.1 gram, the 0.5 gram, the 0.8 gram, the 0.1 gram, that's your $10 bill. The 0.5 gram, that's your $20 bill. And so what we've got here is a complete complement of spendable gold. And that's really what this is all about. So with that, let me take some questions here. My friend Scott says, good evening, everyone. Hey, Scott, great to see you with us here. Mike is asking, do points bank? Okay, so I understand that question. And in typical binary systems, you talk about banking points. The beautiful thing about Karatbar is this is a dual team. It's not. It looks like a binary. It is not a binary. The points will never flush. Those points, as units accumulate down your left and your right teams, they will sit there forever until they get counterbalanced on the other side. And let me give you an example. I know my friend Doris is here on the line. Doris is a friend of my buddy George, but Doris was actually sponsored by Bob Skinner. So Bob Skinner, I can't remember the entire structure of this, but George sponsors Bob, Bob sponsors Doris, Doris sponsors Catherine, and then bang, Calgary, the city where they live in, explodes. Well, I'm the trainer. I'm the guy that's putting a lot of effort into this. So I fly into Calgary a couple of times. My expense, and I'm happy to do it. And that team in Calgary just absolutely exploded overnight. And before you knew it, I had 10,000 units sitting on my left leg and nothing on the right-hand side because I was so busy supporting these guys that I stopped building my own part of the business and was really supporting them. Well, those 10,000 units just sat there for a long time, actually. And I was getting some commissions. Every once in a while something would happen on the other side, and I would sponsor a guy, and so I had commissions flowing through. Well, here's what just happened. I sponsored a bunch of guys in the UK, and over the last several months, they've literally exploded, and all 10,000 of those units have now flushed out, turned into cash, and I've had a couple of amazing couple of months. So those units just sit there forever until you convert them into currency through counterbalancing units. So I hope that answers the question. Jimmy is asking, what can you say about the K Exchange? Well, the K Exchange is basically, it operates like Amazon and Karatbars. In addition to this, part of our e-commerce platform is a tier of merchants who will accept payment in Karatbars gold. And the beautiful thing is you can take physical delivery of the gold, or you can hold it in the vault. And you can actually pay for goods and services through this K Exchange using your gold credits. It's a beautiful thing. Now think about this. We are going to 1 million people. Can you imagine the power of being able to go to a retailer and simply say to them, how would you like to be introduced to 1 million consumers with real money that they'd love to spend with you, and you'll have the ability to advertise with them? Do you think those merchants might be compelled by that? Well, that's what the K Exchange is. We also have the ability to do account-to-account transfers. In a presentation like this, I don't want to go too deep on that. I want people to understand the concept of inflation, the concept of saving in gold. That really is the driver of this. But we have a thing called the K Exchange, and it goes live. We're expecting it to all go live in April, and that's all I'm going to say about that tonight. Doris asks, is it being recorded? Yes, I have recorded this presentation. If the record button actually I don't see the record, but this one is not recorded. So the next one will be recorded. You know what? And everybody always asks me, Howard, what's the best presentation you ever made? And my answer is always the next one. So there you go. The next one will be recorded. Let's see what I got here. Mike says, awesome, with a big smile. Thank you, Mike. I'm glad you enjoy that. And I think that's all of our questions. I'll give it a couple more seconds. If you want to type into the box a last-minute question, we'll take it. And if not, we'll just simply say thanks for coming out, and we'll talk. Oh, wait, something going on here. How many countries? 123, I think, is the current count. It was 121. I think today it's 123. Anyway, a lot of countries.
Well,
and as an affiliate, no matter where in the world you're located, you have access to all of those countries. Yeah, it's amazing.
Thank you, Howard, again for an awesome presentation.
You're welcome. And I'm being told that on everybody else's screen, it says recording, and I'll just hit this end meeting, stop recording. I did record this one, so it's going to take about 2 hours for it to render into something I can stick on YouTube, and I'll make sure that I do that, guys. God bless you. Thanks for coming out. Behold the power of gold. Listen, our currencies are falling. Gold is holding. Now is the time to do it. Get your hands on some grams because our currencies will implode, okay? That's it.
Good night.
Howard Olson, Hal Neff, over and out. Thanks, guys. And end meeting.